think we're at possibly one of the most attractive times to allocate to REITs that we've seen in the last 2 years. We've seen the REIT market underperform relative to other sectors. We see strong property type fundamentals. We see valuations at 25% discounts to the underlying asset value. And then from a tactical standpoint, when you look historically, every time we've seen the Fed end an interest rate increasing policy cycle, it's been a very strong time for REIT relative performance to the S&P 500, and especially on an absolute basis where in each period of time we've seen over double-digit returns for the sector on an absolute basis. So we think we're in a very favorable time for REITs. We think we're finally at a point where the balance between e-commerce and brick and mortar retail is finally reached an equilibrium. E-commerce demand has been incredibly strong over the last decade, and we've seen logistic REITs benefit across the globe from this. In fact, many logistic REITs today, when you even look at their in-place rents, they're about 30 to 50% below market rents. And so they have a long way to go to capture all that rental upside. Meanwhile, on the shopping center side and the traditional retail side, what seemed to be, when you think about COVID, was a very kind of devastating impact initially, turned out to be a net positive for many retailers. We saw this wide suburbanization move across the country. With hybrid work models, we saw more people going to their local shopping center during the week, and traffic has been high. Meanwhile, you've had no supply for about 15 years, and so the sector is producing very stable and strong trends. So we think today there's a strong opportunity in both e-commerce demand and brick and mortar. So we're really excited today about senior housing and data centers from a fundamental standpoint. We've seen the 80 and older population, which has already been growing pretty strong, is expected to grow by over 30% in the next 5 years. Meanwhile, there's been almost no new construction approved, and the current construction pipeline of senior housing facilities is less than 1% of the existing stock. So a huge kind of demand, demographic-based demand coming, and almost no new supply to meet it. So we think that runway is going to be really strong for senior housing. The data center sector, we expect that the generative AI wave is just going to create a ton of new demand for the data center space. And we're already seeing that. Third quarter leasing for the top global data center markets was 1,400 megawatts. That's up 40% from the second quarter, and that's up 180% from the third quarter a year ago. So we're already seeing a huge wave related to AI for data center leasing, and this, similar to senior housing, only the beginning of this trend that's likely to grow for many years. So both sectors, strong demand, a little bit unrelated to the macroeconomic outlook that we think will do well even in a slowdown.